This will push silver to the buy price. Wait until it happens tomorrow. The bad news, silver is tanking. It is heading for your buy price. Wait for it. In this video, I'm going to show you all indicators are saying give it till tomorrow. This is from fxempire.com, and the article starts by saying silver has been testing support around the 50-day moving average for the past several days as it looks to complete a retracement. The pullback low is $28.66, and that is the key support level to watch for further signs of weakness. Can you believe that we're looking at $28 when it feels like I blinked my eyes? It feels like just yesterday we were up hovering at $34. Let's keep going. The article says a decisive drop below that price level puts silver in a more bearish position, given that the uptrend will have been broken by then, as well as the 50-day MA. MA is moving average. A quick recovery back above 28.66 may negate the bearish implications. Otherwise, the swing low from $26 becomes a lower target. Last week's low of 28.66 looks to have completed 5 waves down, thereby opening the door to a possible bottom and subsequent bullish reversal. Not only did the retracement low find support around the 50-day MA and uptrend line, but it was also a successful test of support around the May 21st swing high of $28. Now, when we look at silver price, we're always looking at how silver has performed historically. That's why we have to go back to 21. Let's keep going. In addition, the low found support around the bottom trend line of a falling channel. There are several technical reasons for $28.66 to hold and lead to a bullish reversal, but there are no signs of it happening yet, though. Now, that is an understatement because we are experiencing the same stagnation in silver that held us in the low $20 range for the past 2 years, for the past 2 years. And here's why silver is going to continue to drop. This is from Reuters. And this headline reads, U.S. retail sales tepid in May, manufacturing production surges. U.S. retail sales barely rose in May, and data for the prior month was revised considerably lower, suggesting the economic activity remained lackluster in the second quarter. The smaller than expected increase in retail sales reported by the Commerce Department on Tuesday, however, likely exaggerates the slowdown in consumer spending. Part of the decline in sales was because of lower gasoline prices, which weighed on receipts at service stations. But nonetheless, according to the article, inflation and higher interest rates are testing the resilience of consumers, with households generally prioritizing essentials and cutting back on discretionary spending. That's exactly where we, as silver stackers, that's where we are stuck, because the strength of discretionary spending always impacts the price of these precious metals right here that I'm holding in your screen. You can't eat silver, right? This is really, when it comes down to it. I know for you and I, as silver stackers, we see this as crucial, but really, this is discretionary spending. And this data is telling us that it's not just you and I. The consumer in general, we're all struggling with discretionary spending. So it makes sense that we see this drop in silver as it goes down and farther down. Let's keep going. This article says retail sales have in recent months been distorted by an early Easter. Stripping out the volatility, the trend in sales growth has been slowing also as banks are tightening access to credit against the backdrop of lower income borrowers increasingly struggling to keep up with their loan payments. And that's why we see credit card debt still skyrocketing. Let's keep going. The article says, though the labor market remains on a solid footing, this is the frustrating part. The labor market does remain on solid footing. It is becoming a bit difficult for people who lose their jobs to quickly find new work, and wage increases are moderating. Savings have also been whittled down. Still, the pace of spending is likely sufficient to sustain the economic expansion. Now, this tells us that silver is likely to continue to drop in price this week. And if you're waiting for your buy price, then give yourself 24 hours and you should be buying the dip. I'm not a financial advisor. I'm just a silver stacker. I've been in this game for years, and I follow the patterns of silver. And this is what we see as silver heads down in this direction, and we see these data points coming out from these economic releases. This typically shows that, yes, by midweek, which is tomorrow, a nice 24-hour period, that'll be the dip. And if you're waiting to buy, and I include myself in this, I've been waiting for a dip. This is a good price to go in. Again, that's just my personal opinion. If you're enjoying this video, please hit like, please hit subscribe. It really helps to get this information out there. Let's keep going. The article says there was some encouraging news on manufacturing where a revival appears to be underway. The sustainability of the recovery, however, depends on how long borrowing costs stay at current levels, as well as how much consumer spending slows. Growth in manufacturing output looks set to be incremental in the second half of this year, and output will likely take until deep 2025 to return sustainably to its 2022 level. Really, everything is pointing that way. And I think that's a pill that we all need to swallow. And really, we might need to just set our expectations of rate cuts happening in 2025. I mean, that's really where everything is headed. Let's keep going. This says high interest rates and waning price power will limit growth in business investment, while the relatively high level of the US dollar will dampen external demand for manufactured goods. It's interesting to see that this author mentioned the strength of the dollar, because we've seen two major blows to the dollar this week. First, Saudi Arabia, well, last week really, Saudi Arabia backed out of the petrodollar system, and the World Gold Council's report was just released, and I posted a video on about this on my Silver Spike channel. The report surveyed 70 central banks. Here, I should be showing you some gold while I'm actually talking. I'll put some gold out here. Here's some gold while I'm talking about gold. Here's one of my favorite, even though it came out about 2 years ago. I think that's called the Toro. So the World Gold Council report was released, and the report surveyed 70 central banks, and check this out, 30% of those surveyed plan to increase their gold holdings. And watch this. They stated that the diminished strength of the dollar is a major motivating factor.